Just 5 years ago, everyone was saying electric cars were the future. It felt inevitable. Companies were announcing millions in sales, governments were handing out massive subsidies, and investors were throwing billions around, absolutely convinced that gasoline cars were about to disappear forever. People imagined that by 2030, our streets would be silent, full of electric cars gliding along with no exhaust, no pollution, and no gas stations. But then something strange happened. Starting at the end of 2023, the entire world began sending out warning signs. Demand for electric cars suddenly dropped. Warehouses started filling up with unsold vehicles. Factories that had been running 24/7 just a year earlier began shutting down their production lines. And for the first time, a big, uncomfortable question started to surface. Was the electric car boom just a bubble? Let's break down what's really going on. The first major red flag was the global slowdown with numbers that nobody expected. For years, sales of electric cars were supposed to keep growing at a staggering 30 to 40% every single year. But in 2024 and 2025, that growth collapsed to just 9% globally. Let's look at Europe, which was once considered the electric car paradise. The market there completely crashed. Growth plummeted from 18% all the way down to 4%. In Germany, the powerhouse of the European auto industry, sales saw a shocking 30% drop after the government removed subsidies. It was a clear signal: take away the free money, and a lot of the demand vanishes. Meanwhile, over in the United States, a different kind of problem was brewing: the infrastructure nightmare. America had an ambitious plan to install 500,000 public chargers by 2025. Sounds great, right? Well, in reality, only 70,000 were actually installed. That's just 14% of the goal, and consumers definitely noticed. The common complaint became, where am I supposed to charge this thing? I'm not spending 40 minutes waiting at a public station. I'll just stick with my gasoline car, thanks. The dream of convenient, widespread charging just wasn't materializing. But here's the real shocker. Even Tesla, the undisputed king and symbol of the electric car revolution, is struggling. For years, Tesla seemed untouchable, but now it's facing serious challenges. In 2024, their sales dropped by 8% and profits fell by a staggering 45%. The year 2025 started with Tesla's worst quarter since 2019. Even Elon Musk had to admit that Tesla had entered a major challenge phase. He cut production in their China factory by 15% as cars piled up in warehouses, unsold. And then came the price cuts. Tesla launched historic discounts, with the popular Model Y dropping below $40,000 for the first time ever. This wasn't a generous move by Musk to make EVs more accessible. It was a desperate one. He had to cut prices because the demand simply wasn't there anymore. The magic was fading. It wasn't just Tesla. The legacy automakers who had jumped headfirst into the EV race suddenly hit the brakes. Ford, for example, froze 70% of its future investments in electric cars. They completely stopped a major battery factory project in Michigan and slashed production of their flagship electric truck, the F-150 Lightning, by 50%. The financial bleeding was immense. Ford reported losses of between $5.6 and $6 billion from its electric car division alone. General Motors followed a similar path. They paused the development of several new electric car models and delayed the construction of new battery factories in Ohio. It was like the entire American electric car dream hit a brick wall, all at once. The big players were retreating, so what was the real killer? Why did this all happen so suddenly? A huge part of the answer lies in something we all hoped would get cheaper: batteries. Car companies built their entire strategy on the expectation that battery prices would fall by half by 2025, but that never happened. Instead, prices stayed high, and in some cases, even went up. There were a few reasons for this. The cost of essential materials like lithium and copper jumped. The supply chain war between the US and China slowed everything down. And since batteries make up 35 to 40% of the total cost of an electric car, this was a disaster. Expensive batteries mean expensive cars, and expensive cars mean fewer buyers. The fundamental economics of the EV transition were broken. While Western companies struggled, another giant was rising. China began to flood the world with cheap electric cars. Today, China manufactures 65% of all electric cars on the planet. Companies like BYD are now selling electric cars in Europe for as little as 17,000 euros. This sent shockwaves through the European auto industry. In response, Europe launched anti-dumping investigations, claiming that the Chinese government had given its electric car companies an insane $130 billion in subsidies. But the damage was already being done. Some European factories began shutting down because they simply couldn't compete with China's rock-bottom prices. Amid all this chaos, something unexpected happened: the comeback of hybrids. These cars, which combine a small gasoline engine with an electric motor, are suddenly making a strong return. They're cheaper than pure EVs, they're practical, and most importantly, they don't depend on a non-existent charging network. Look at Toyota. While other companies went all in on EVs, Toyota took a slower, more cautious approach, focusing heavily on hybrids. For years, they were criticized for being behind the times. But now, their strategy is looking like pure genius. Toyota's hybrid sales jumped by 33%, while pure electric cars still represent less than 2% of their total sales. They bet on practicality, and it's paying off big time. So, is the electric car sector collapsing? No, not collapsing, but it's definitely being filtered. The hype phase is over. We're now entering the survival of the fittest phase. Companies with weak technology and inefficient production are not going to make it. Companies that were completely dependent on government subsidies are going to disappear. And companies without deep cash reserves will fall behind. Tesla will surely continue, but it won't rule the market forever. Ford won't quit electric cars, but it's clear they are slowing down and rethinking their strategy. The whole electric car transition was built on 3 pillars, and all of them broke at the same time. The first pillar was technology breakthroughs. Everyone expected solid-state batteries, the holy grail of EV tech, to be ready by 2025. That has now been delayed to 2028 or even 2030. The second pillar was government support. Subsidies were drastically reduced or removed in both the US and Europe, taking away the financial incentive for many buyers. And the third pillar was over-optimistic forecasts. The International Monetary Fund, for instance, cut its prediction for the 2030 electric car market share from 50% all the way down to 27%. When all 3 of these pillars fall at once, the entire industry is going to shake. But there's an even bigger crisis looming, one that goes beyond cars and batteries. Our electrical grids are simply not ready. It's not just a shortage of chargers. The grids themselves caught and support the massive demand of millions of electric cars charging at the same time. In the US, 18 states have grids that are officially considered outdated. The state of Texas reported that adding just 1 million electric cars to its roads would require $28 billion in grid upgrades. In Europe, countries like Belgium and the Netherlands have already had to shut down some charging stations during peak hours because the grid couldn't handle the load. The dream of a fully electric world by 2030 has officially ended, not just because of the cars, but because of the infrastructure that's supposed to power them. Unsurprisingly, investors are paying attention and pulling out their money. Valuations in the battery sector have dropped by 60 to 70% from their peaks in 2021. Smart money is now shifting towards other technologies like hydrogen, synthetic fuels, and, of course, hybrid cars. The market isn't collapsing, it's rebalancing. It's moving away from a single, hyped-up solution toward a more diverse and realistic mix of technologies. So, here's the final verdict. The electric car revolution isn't dead, but the fantasy is. The idea that we would all be driving EVs by 2030 was a dream built on hype and cheap money. We are now entering a new era. What if slower growth, tougher competition, higher production costs, lower subsidies, and a brutal survival game for automakers? The hype is over. The great filtration has begun. Thanks for watching. If you found this breakdown interesting, make sure to like, subscribe, and hit that notification bell for more deep dives into the technologies shaping our world. See you next time.